All right, so this video is about the daily trends section of Get Stock Ideas. And I'm highlighting, up here you could select a bunch of different filters. So you can look at, only metal stocks. So that would show you in relation to the GDX. Only oil stocks, biotech. Those would be probably in correlation to the XOP ETF and the IBB ETF. And then down here, there's a bunch of other sectors and industries that you can do. But the example here is it's pretty much the same overall. You're just looking at different sectors or different indices as far as what you're relating things to. So down here, you'll see that depending upon which one you select, you'll see the main ETF that sector ETF or that indice ETF is related to. So up here we have S&P 500 selected. So that means we're looking at the SPY price here, and down here we're looking at the stocks within that ETF and how they relate to their moving averages. So let me deselect everything but one moving average here, and you'll see this green line is the percentage of stocks above or below their 30-day moving average. So when it's up really high here, right here, it's about 94% of stocks are above their 30-day, kind of reaching a very overbought condition usually. And then down here, a very oversold condition when it spikes this quickly down below here, where it looks like it's about 19% of stocks were above their 30-day moving average. So that's what these lines show. And I like to look at a couple different ones when I'm actually using this for an actionable trade idea. So let's take a look at what we're seeing here. I look back here where I think this was the Brexit news. You'll see that stocks were still pretty strong here. The 200-day moving average still above 50. So more than 50% of stocks were still above their 200-day moving average, and looks like still took a good whack on the 100, but still the 30-day moving is. So what I'm trying to summarize here is that the 200-day moving average stayed very strong, but the 30-day dipped down below this green line. So what that tells me is that that's an oversold condition that's likely to bounce. And you'll see that is exactly what happened. So that means that there's 50% of the S&P that is still very well supported by being above its 200-day moving average. And if a short-term one like the 20 or 30 dips below that level, that's usually a sign that there is a good chance that you can play that either the gap down from a large move like that, or a continuation of the move where you get an all-time, a new high all over again from that. So let's take a look at another thing over here. I mean, it's right now we got obviously the election results, throwing the 30-day way back up here again and strengthening the 200 days as well. And I mean, this is something where we're not really getting a signal yet on this. That's what you can kind of look at this. It's pretty worthless here. I mean, if the 200-day moving average over time started to weaken and then the 30 days it jumped up again, that would be a sign of shorting it. So let me see if I can find something else that might be a good example of that. All right, well, here's something that's really been weakened down. This is the gold stocks. So you'll see that it was insanely strong in the beginning of the year. There were 90% of gold stocks were above their 200-day moving average, and now it's really gotten whacked. So any pop up from here will have a really difficult time continuing to grow because so many stocks are below their 200-day moving average. So this is almost getting to the point where if this green line jumps all the way up above this red line, so maybe if gold stocks jump all the way back up to 25, that could be a short-term play to the downside is what I'm getting at. So this is a great example of when gold stocks were doing fabulous. So back in May, when the 100-day moving average and the 200-day moving averages were just rock solid, and then the green dipped down, that's a great time to continue to buy in right there and then get that continued play. But then when stuff starts to break down like this and the 100 goes below and 200 starts to die off, you might still get these little pops, but then it's not going to be nearly as a no-brainer as this one. So I guess to summarize, you're looking for strength in the longer-term moving averages of, or at least the stocks versus their longer-term moving averages, and then a short-term weakness in them versus their shorter-term moving averages. And obviously, you could flip this around for a bearish play where if everything's really weak, so this gray and yellow line are down here, and then the green line pops way up, you could short it from there. So that's the idea behind all of these different sectors and industries and how you're looking at them. So if you're really trying to narrow it down, if you have a lot of your portfolio in a certain industry, should I start taking profits right now? Should I add to my position? Or if you're an ETF trader, should I jump into a 3x ETF and play a short-term bounce to the upside or to the downside? That's what this section aims to do for you. And I think that's about it. And again, you can jump across many different sectors and industries down here and get a feel for each and every one, and they're all basically about the same as far as the ETF up here and then those stocks versus their moving averages down here. So thanks for checking this out. Talk soon.